There's a couple different ways to use them. A lot of traders use them to try and trade in between, buy when it hits the lower band, sell when it hits the higher band. That's one way to use them.
Good morning.
Good morning, Nicholas. How you doing?
I'm doing fantastic.
Say Nick.
Oh, far from it.
How's it going? How's it going, Nick?
It's going very well. How about you guys?
Well, we were just talking about Apple here, and lots of analyst changes. It's actually up 20 cents here today. And Joel's like, this thing looks like it's got a little bit of a triangle formation forming. What is Nick's thoughts here on Apple?
I think that Apple played a pivotal role this week, and I think you guys were on the money. While I was waiting in the green room, I was listening to your debate on Apple, and it's played a pivotal role this week and on Friday as well. And I think yesterday it gave me some gumption to actually short the market based on it not having legs to go much higher, given on what I was seeing in the options market and the behavior of actually the stock price. Looks like on Friday they were defending it. They, as in the proverbial day, I think the company itself may have been buying some stock or something. Every time it got to a level, it bounced. And yesterday was defending the 99.5 until the last minute, and we were saved by the bell. But Joel is right. I think that it needs to hold certain levels. Otherwise, if you look at the last 5 weeks, if you pull up the 5-week chart, a weekly chart that would show the last 5 weeks as well,
Yep.
and you can see the range tightening. And usually that needs to resolve itself, right? One way or another. They're collecting energy, and then the energy needs to be released. Well, I just don't see it going upwards without another surprise product or a good announcement. Yeah, the GTAT may work out well for it by having control over the glass production for itself, but I don't know if it's exciting enough for people to go out and reach for the highs again. I looked yesterday at the all-time highs from which it fell a few years ago, and I wanted to see how long it's spent up there. And I think we've overstayed our welcome up there. So if it loses 97 emphatically, the whole market is in danger because of Apple. That's my opinion.
Yeah,
What's the open interest looking like for this week here, Nick?
It's lined up for the bears to have the upper hand. I'd be surprised if it breaks 100. You remember last time we were together and I said, don't chase Apple on my way out?
Yeah.
Yeah, you don't need to chase Apple
Same thing.
again this week. I mean, the hard line is 100. And even if they break 100, 101 is just as strong. 102 is even stronger, and 3 is just as strong as 101. A little weaker, but the collective 100 to 102, 3 is just a brick wall, in my opinion. It would definitely need a big headline to pierce, based on today's look of the open interest.
Nick, I've got a question for you. Just before we go over to Joel. This open interest, we always complain how, high frequency traders come into this market and actually they thicken it up sometimes when there's nothing happening and can actually reduce volatility, which is sometimes annoying to traders because the stocks don't move. But what about all these weekly options that we have every week? When you get everybody taking on these new option positions every single week in Apple, and they're loading up the calls, they're loading up the puts. And then when the stock goes above their strike prices, they're going to be selling the stock against those options. A lot of those traders, at least the professional market makers will be. Doesn't that actually thicken up the stock so much? And isn't that maybe a cause of some of this reduced volatility and some of these big cap names? It's just that the weekly options, it just thickens everything up.
I think, it's the alternative. You either you cause volatility by moving the stock up and down to make money, or you profit from the options market. So I'm pretty sure it takes away from actual price moves. And but for me, it just gives me something to shoot at. And the last few weeks, I've been doing a review of my daily ranges and posting a video on it, and I laugh at the end of the day because I feel like Nostradamus. Not that I'm that smart at it, but I've developed the knack, and it's amazing how accurate these things can be. So if you haven't done it, look into it. If you don't know how, reach out to me. I'll show you. No, I won't show you how, but I'll share with you my levels. Reading the tea leaves is pretty important, especially when you're trading big money. I mean, you don't throw darts. You mentioned earlier today about having to diversify. You started when I jumped on
your trading portfolio, yeah.
Yeah, you need to diversify because of what happened to GTAT yesterday. I mean, what happened to GTAT could happen to any of these high flyers at any point in time. We know it can. And GTAT was just a reminder to all the Uber bulls that are just chasing any headline that, oh my gosh, one of our colleagues just died, kind of a thing. It can happen. So it brings them down to reality. Not that GTAT was like driving the market down, just sentiment turned sour a little bit. And
Yeah.
really, that's what brings me to my point. Nothing has changed in the fundamentals in the last couple of weeks. Sentiment took a complete swing up and down in the last 2 weeks, and that's all that changed. The fundamentals are all the same. What's new? The fact that Europe is mired? No, it's been around. That China is in doubt? It's been around. That the United States is recovering okay. That's been going on. Nothing. I don't see anything new. Maybe a few headlines of Ebola, and that's about it. I mean, ISIS is still here. In fact, it's been absent from the news, and now it probably will rekindle a little bit. So nothing fundamentally changed. It's just the sentiment took a big swing up and down this last couple of weeks. So stick to your thesis, and diversifying is good, but it won't protect you in a directional trade. You need to trade against yourself, which means hedge. So if you're super long, diversifying between Coke and Apple and some other banks and whatever is great, but you also need to hedge.
Uh, I want to talk about, well, first of all, what's the significance of Apple hanging up here at the $100 level? Now, I have the long-term chart up here. When it got up to 700, I believe it was 705.20 last time. It did hang out there very long. Do you think that, I mean, that it could be a bullish signal this time that it's hanging up here? Or like looking at the monthly chart, I mean, I know I'm the perma bear on Apple as well, but I mean, doesn't that make a little bit of a bullish case that it's been holding up here for quite some time?
In theory, yes. I mean, the longer you stay up here, the more people get used to that price. And but I don't know how much longer we are up here than last time. And just the set of circumstances are different. But the trading range has gotten tighter and tighter and tighter, and something needs to happen. So whether it drops down all the way like last time, I don't think it will, because last time people felt like morons at selling it at 400, because when it fell down from 700, because they started reading tweets of people or some people on CNBC. I remember one lady, I forget her name, she said, "Oh, Apple is heading like to 220." I was like, math doesn't work out at 220. Something would have to drastically change in its bank accounts in order for it to come down to 220.
Right.
But so people were selling at 400, and the smart money was buying with two fists. So I don't think, even if it falls out of grace, I doubt it will have the same level of hate, unless there's some math working towards that, like a highly leveraged trades that need to unwind that way. And at that point, Apple, I think, is committed to buy its own stock and put the brakes on a little bit, because that seems what Tim Cook loves to do. So yes, it may fall, but I don't think it will fall $40 like last time.
Okay, we got to ask you about Priceline here, boy. This,
Yeah,
look at this. I
yeah.
mean, we talked about 1100. I mean, I didn't think it would get there so quickly. I know you make some longer term plays on this one. What's going on with Priceline?
When it got a beating last week, I sold the naked puts in at 985, and just 5 minutes later, I bought them back $1.50 cheaper. And 5 minutes later, they were $1.50 cheaper than that. So I didn't cash the bottom, but I did profit okay on it, just with 5 minutes worth of trading, and it was at 985, and it was a January 2015 put. So I felt that that was the easy way to catch a falling knife. However, it's now down to a level where it needs to hold, which is the 1100, 1090, the 1100, because it's visited that 3 times before in the past few months, and they look like triangles if you pull up the chart. I'm looking at weekly because we're talking big picture, right? So I don't
Mm-hmm.
need to see the noise. And every candle is a week, and I see 3 times it visited that, and this is the third time, and it held. So it better hold. The options market is too thin to tell me exactly how to trade Priceline, so I traded based on my own feel. There's not enough open interest in order for me to put a full-blown weekly trade. I do not like to trade weeklies on Priceline because it moves $40, $50 a day for no reason.
Right. And another thing that you've alluded to on the broadcast several times is that they derive a lot of their profits from Europe.
Europe. Yeah.
Yeah.
Well, yesterday it was obvious. Sorry to interrupt there,
Oh,
Joel,
go
but
ahead. Go ahead. Take it away.
yesterday when the market was all green, I had one red stock on my watch list, and that was Priceline. So I sent out a note. I said, if you want to short the market because you think the market is popping on a relief this morning, Monday, then you might want to take a flyer on Priceline. And then Amazon joined it really quickly. So those are two that you would buy. So I bought some put spreads, lotto ticket for this week at 1080. Nothing major, just small money to participate. So I bought the 1080 put and sold it 1075, just small money, and see if it drops another $20. Then that thing takes heat. But if you do like Priceline and you want to take it a long shot, I would take it if I was forced to do that. I would go out in time and take a very low credit put spread. So I would sell a put and buy a lower put. And you can probably collect some big money if you play the January ones. Fundamentally, it's a good company. It's just relying on Europe.
Nick, you made a great point there just about a minute ago, and you said you looked at your screen when the market was trading up and you felt there could be some weakness, and you looked and identified which stock was trading down. The small guy, the little retail investor, or the investors that are just starting in the market, look at that and they see an opposite picture. They're like, everything's trading up. This stock is trading down. That's the one I want to own. But you as a professional identified it the exact opposite way, is the same way that I would identify it. I look for the relative weakness. And because you looked at that relative weakness, the stock that's red on your screen, you weren't thinking buy that thing. You were thinking sell that thing. And that's the fundamental difference between somebody that's a seasoned trader and somebody that's starting out. Isn't that the best way to trade, is to look for those relative weak stocks?
Yeah, that goes along with the big statement of don't chase. And that's part of don't chasing. Instead of getting that, they say, well, you say don't chase. What does that mean? How do I identify? For me, it's very easy. It's a feeling inside. We're human. We're herd. We want to live in communities, right? So you see everybody doing one thing, you're instinctively inclined to do the same thing. Think wildebeest jumping into the Nile or into the river to cross the other side, knowing that there are crocodiles that are going to eat you. But because everybody's jumping in, they follow. So we're instinctively want to jump on that trade. Everybody's buying, buying, buying. Monday morning pop, oh my God, I need to buy. You get that instinct. Walk away, go get a cup of coffee, or do some research. So yes, what I did is people say buy the laggards, they're about to catch up. No, they're probably laggards for a reason.
Yep.
And instead of buying the laggards, look for that injured animal in the herd that you're trying to hunt down. Instead of having to chase something that's strong and short it, why not short something that's already limping? There is a caveat to that.
There he is.
Sometimes, like if the markets are running based on I'm here.
Okay.
If the markets are running based on
I don't know if this is Nick.
yeah, if the markets are running on the backs of the momentum stocks, and if you see Tesla and all of those heating up, and yeah, I'm here.
Yeah,
Okay.
you're fading
Fine,
in and
guys.
out for some reason.
Okay.
I'm not sure
Hello?
why. Yeah, we got you here now. You
I'm
just
not-
it's fading out. So.
Okay, it's not here. You guys are. I'm hearing you very strong. But anyway, so if the weakness comes from the fact that people are shifting money from it to something else, like if they're going out of the Cokes and the old stocks that are perceived as safety, and going into fast money stock, then this is different. But this was a fast money stock, not running with the fast herd, so that's why I picked on it.
Okay, how about Alibaba? Is it giving you enough data to step out in this? Kind of range trading here, quieting down a little bit, gleaming anything from the options markets, or your thoughts on Alibaba?
I have not looked at it in the options market yet, but Alibaba, I mean, I would feel stupid to say, oh my gosh, I want to take a bearish position on it, because it sounds like it's the perfect company. I don't know much about it. I did subscribe to 11 million as soon as they came in by invitation only, and I haven't bought anything there. It feels too fancy. I prefer Amazon and everything else there. But the thought on Alibaba is, if you believe it's going to be another Google, so why not buy it and forget about it?
Okay,
We
and
got
what?
one stock from the chat here. Rob Hood is coming in with Rent, R-E-N-T. This stock broke out, made new highs here yesterday. What do you think of this one, Nick?
RENT. Whoa, that's a pretty big spike here. Last couple of weeks. it's coming up against previous area of where it fell apart. So I don't know what they do, but let me see on the technical. Let me zero in a little bit. Technically, it looks like it may have another candle, but this week is not starting out too well. I really don't have much to say about it. Let me see in the options market if they show anything. When do they report or anything anytime soon?
I don't follow this stock here. Brentster, what do you got on rent there? Does this do you follow this company? I can tell you technically this stock is coming up to major resistance though, because we're up at $69 back in February. Yep. And $68.77 back in March. So we are approaching some major resistance areas.
The options market, not that it's heavily option traded, but they weren't prepared for higher than 50 and 55. So there are a lot of calls at 50 and 55. So I'm not sure how long it's going to stay up here. On the defense side, there's not much there, but it looks like everybody's banking on the calls. And if it broke 50, then whoever had those calls is in the money nicely. So it all depends on who did those calls on that.
Another thing, Rob Hood, with this is I do see some move up and then some kind of weird periods of consolidation here. So we'll see what happens. You had continuation of the move yesterday, huge move in it. Let's see if you get a couple days of consolidation and then what way it resolves itself to that consolidation. But once again, Dennis mentioned a great level here in the issue, the all-time high up at the $69 level.
I'd be surprised if it consolidates that thing with you. It's if it breaks 60, get out.
Brentster is saying we'll report on, it looks like November the 7th, so it's a little ways away yet.
Yeah, if it loses 60, because it has like a small range up channel, and if it loses 60, I'm out for sure.
Okay, just we haven't done a lot of just general market talk here. Made that low, had people hiding under their desk at 1980 and a quarter. Got the bounce up to 1971. I was kind of looking. My secret number yesterday was at 50% retracement at 1966.50. It didn't get much past there, and now we're a good 15, 16 points away here. What's it going to take to get this market back to new all-time highs, Nick? Or is that 1918 quarter? I mean, is that just a temporary stopping point on the downside?
I think that Apple will play a pivotal role into where the markets go, at least the initial whoosh. I don't see any new reason to chase lower numbers. I mean, nothing has changed in the fundamentals, like I said. So I don't see a negative catalyst that's in the news right now. A new headline, an inflammatory headline sure can break it and scare people out. I am long the market at lower levels, but I'm also short at much lower levels than I was short before. So I'm not afraid of pops as long as there continue to be relief pops that something bad didn't happen. Like Monday morning, pop because we didn't get any bad news of in Hong Kong or Ebola or whatever. So they're all relief pops. There's no pop yet based on fundamental change. Now, if the Fed comes out and says something new that fuels a fire, then yes, I won't stand in front of the pops. But so far, they've been, just relief pops. And the ranges are well defined in the options market this week and last week and the week before that. So if you know how to read them, you can trade well within them. So the ranges are definitely well defined. Yes, we got a scare at 1927 or whatever it went down to on the SPX, but you could see where the lines of defense are and where the lines of resistance are.
Okay, Nic Chahine, Marketfy Maven, and author of Create Income with Option Spreads, and he's spreading his wisdom to our listeners here every Tuesday morning at 8:35. Nick, we really appreciate you coming on, and we'll talk to you again next week.
I look forward to it every week. Thanks, guys.